Yeah, I think skiing will be limited going forward. Hi, Mark.
Hey guys, how are you?
How are you?
Yeah, good. I'm just going
Pleasure
to
to meet you.
grab a drink and then we'll be ready to go.
Yeah,
Is it just me or is there a few different founders?
we have a few people already in here. I'm Bill. There's Batar and Daniel.
Nice to meet you guys. Yeah, give me 2 seconds. I didn't expect the meeting to start straight away.
Yeah. Hmm. Where are you based?
I'm in Glasgow. I'm in the UK.
Ah, okay, nice.
What were you?
I'm in Hong Kong.
Oh, nice. Very nice.
So Dominion, what does Dominion do?
Yeah, we are building tokenized silver on Solana, backed by real physical silver.
Physical silver. Okay, so not paper.
Not paper, no. That's why we are building it, to be fair.
Hmm.
Is this live streamed?
Yeah, it is. We will start streaming it in a couple minutes. So yeah, you can join from X as well from the official page. So your audience
It's
will
just so I
see.
can share it across socials, yeah.
Yeah, just open EasyMM page and it will be live soon.
Perfect.
Hmm.
It's already live, by the way. Yeah, we can join.
In the there.
Yeah.
Open live video, right?
Yeah, just join it.
Okay, I joined.
Recording in progress.
Yeah, we will start in a couple minutes. Just waiting for people coming.
Hmm.
So yeah, I think we can start. Hey everyone, welcome to RWA Day. I'm the new cousin from EasyMM, and first let me briefly explain how it works. So 5 projects that tokenize real-world assets, pitch for 2 minutes each. Then we open it up for questions, your questions from the chat, life. So this is your event. If something doesn't make sense, ask. If a number sounds too good, challenge it. And if you want to see proof on chain, say so. That's why we are here for. And I will moderate it and will jump it where it's needed. But the best RW days, in my opinion, are the ones where the audience drives the conversation. So today's lineup, first of all, dual mint, which is tokenizing cash flowing machines like laundromats and vending. Dominion is bringing in physical silver on chain on Solana. Shift built leverage tokenized stocks. You can buy 2x, 3x buy and short position directly in your wallet. Any Gold connects investors to a working gold mine in Peru with payouts in tokenized physical gold. And Agaima Finance is doing on-chain private credit backed by real loans. So 5 different products with 5 different risk profiles. Let's see who holds up. Drop your questions in the chat anytime. We read everyone on YouTube, on X, and here in Zoom chat as well. So let's go. First, dual mint. Bill Lee is going here from Hong Kong, where it's 11 p.m. right now. So thanks for being here today, Bill. As I mentioned, dual mint tokenized machines that generate cash flow, and every machine tracked by telemetry. They've been live for about a year. So Bill, it's your 2 minutes.
Excellent. Thank you so much, Daniel, for inviting me as part of one of the 5 projects. Very happy to be here. So I'm gonna talk a little bit about dual mint. So most yield products out there fails the same way. So, something spooks the market, price move, everything you hold drops together at the same time with no warning. That's how financial risks work. It's all correlated, and when it breaks all at once. We're building something that fails differently. Dual mint finances physical machines like laundromats, air conditioning units, vending machines, and in the future, humanoids even. The yield doesn't come from a token or a trade or someone's promise to pay a loan back. It comes from a machine running. A quarter drops in, a washing cycle runs, revenue comes out every day in any market. So we don't really underwrite whether a borrower can repay a loan. We underwrite whether a machine get used. That's the whole difference. A loan defaults overnight and it's gone. There's no warning. A machine doesn't. When usage drops, we see it in the telemetry weeks before the cash stops. And when an operator underperforms, we don't chase the default. We swap the operator out. The machines keep earning. So the question a sharp investor should ask isn't, does this yield look good? It doesn't, does this blow up when everything else in my portfolio blows up? And the answer is no, because it's on the same axis. A rate cut doesn't reduce laundry cycle. So here's the receipt. We have been running this for the past 13 months. There's been 0 defaults. We have underwritten over 1,250 machines so far, financed and settled on chain. Our operator capital is live. Wait.
Yeah, thanks, Bill. That
wasn't me.
Let's open it for the questions.
Oh, okay. And operator capital is live and earning on chain right now today. The infrastructure is being built with us. The peak. Oh, sorry.
Now we move to the question part. So let's,
okay. All right.
Let's answer the question. Let me start the new timer, 10 minutes. So let me start. How do I actually invest and what's the minimum?
So today, like I said, we have ran we have a marketplace we've been listing a number of machines. We have a few products out there, IoT device, basically a depend device. We have laundry machine laundromats. We have arcade claws. Most of them have been sold out. So the next unlock is really we're trying to roll out a vault product where we want to start attracting, institutional liquidity as well as DeFi liquidity, so we can diversify across, a lot more of these machines. So when the vault goes live, it will be basically, anybody can deposit in it from anywhere from, I don't know, $10 to, there's no limit on however much you want to deploy. But today on the marketplace is a one-to-one mapping. So a laundry machine costs like $1,000, and then we have some other ones product that costs like a few $100s. They really dropped and sold out like relatively quickly, pretty much immediately.
So can I pick which machine I invest in?
On the marketplace, you can. Again, it's a one-to-one mapping. So one machine maps to one token. So when you hold the token, you actually earn the future cash flow from the underlying machine. But on the vault product, it's basically a diversified vault. So you can think of it as sort of like a mutual fund, so to speak.
And vault is interesting opportunity, but currently, like if I picked some machine, what happens when the machine breaks or an operator walks away?
Yeah, sure. So we actually work with like operators that runs the machine. So we don't like Doomit doesn't actually own the machines ourselves. So we have contracts with the underlying operator, and the underlying operator basically maintains the upkeep of the machine. So that it might take some disruption, but they're in charge of doing the maintenance and upkeep of the underlying machines.
Got it. And so you're launching a vault product right now. I can like pick my machine, and it's understandable. But in the vault, you pick for me. So why should
Yes.
I trust the vault to allocate better than I would?
That's because we actually require a number, the bar to get into the vault is a lot higher. So for the operators to get into the vault, they actually have to have, a pretty healthy history of the underlying machine. All the machines, the way that we actually underwrite usage and not credit is that all the machines that we underwrite, we have telemetry integration. So that allows us to sort of monitor the usage information. And also, we require to have API access into the operator's backend, so we can sort of reconcile the usage data with, the monthly cash flow that is coming in. So in the future, we're looking to use our marketplace as sort of like an incubation platform where we would test out, newer operators and newer categories of machines that so that we can run it for a couple of months, make sure the yields are being paid, make sure the telemetry information is being collected, make sure the operators are legit before we actually put those machines into the vault. So the vault product is really designed for you know for like institutional much larger investors who's looking to allocate into the vault.
I got it. And like, does it work on blockchain right now? And why does this need blockchain? It can be just fintech app.
Yeah, so right now we are EVM compatible. We have machines on Arbitrum, we have machines on Base, we have machines on Peak. Peak is actually one of our strategic investor because I mean, I don't know if you guys heard of Peak Network. They're all about like machine economy, so they're all into like AI and robotics. They're looking for us to be the rails to bring on, to basically underwrite the robots in the future, humanoids. We actually also did a three-way partnership between Peak and CoinList. So CoinList, as you guys might know, they launched, the Trump coin, and they're pretty large. But obviously the ICO market is kind of not doing so well, so they're kind of pivoting into what they coining the IMO, initial machine offering. And we will be sort of the rails that are sort of going to be underwriting the machines for them.
Mm-hmm. And how does it work in terms of investor rights? So, what kind of agreement or smart contract you have that guarantees cash flow, maybe some collateral? How does it work?
So we have structured our corporate structure to be institutional. So so our holding company is in Delaware. We have a Panama Independent Foundation operating company. We structure, SPV to essentially hold these assets and do a lease back to the underlying operator. So and then we are working with, we're in the Chainlink build program. We're working with Chainlink, basically to do the NAV calculation and basically brought all the information back on chain. Again, the telemetry information that we're collecting, we're going to be putting all that stuff on chain. So we're trying to be as transparent as possible so that investor can see the usage on the underlying assets, and the cash flow that is coming in is going to be all brought on chain.
Mm-hmm. And the token holder gets what exactly? Like, is it part of revenue from SPV or share in SPV, or what exactly?
So in the case of the marketplace, there's a provenance that is attached to every machine. So the token holder actually earns basically, it's a future cash flow from the underlying machine, minus, the service fee. In the vault, so in the marketplace, the operator is actually the counterparty. In the vault situation, Doomit is going to become the counterparty. So, we would basically be diversifying into, the different assets, and then we would process the yield and pay out the yield monthly, to the vault holders, token holders.
Okay, I got it. Maybe some other questions, guys.
Yeah, I have one. So mainly all the 1,250 machines are operated in Hong Kong, or it's like
No, we have some are in Hong Kong, some are in Vietnam. We are, expanding more in Southeast Asia because, physically I'm here. But we're getting a lot of interest like elsewhere, like from LATAM, from Middle East. I think Daniel just brought up, some interest in Europe as well. So we're constantly trying to recruit new operators. We have a program to basically want to bring on different operators worldwide.
Okay. And now one question regarding the, as I slightly understand the business of vending machine, the three main rules, location, location, and location. So in terms of, as I understood the process itself, so the investor gets the token. It's actually, I think, more like used to NFT because it's not interchangeable because it's
Yeah.
connected to exact
Yes.
machine.
Yeah.
And how I can try to get the best spot for my machine that I'm investing to.
So typically so again, Doomin doesn't actually operate the machines. We work with existing operators that are actually trying to grow their business. So, the operator is essentially putting the machines in different places. So like in the marketplace, we have the provenance, and the provenance actually have information about where the location of the machine. But again, in the vault sense, we would actually, be diversifying into the machine, so there's no choice on where we would be choosing where the machines are instead rather than you. But if you want to invest in individual machines, you can kind of select where it is, like location wise, because it has geographic information as part of the provenance.
Yeah, that's why I'm asking, because the concept of
Right.
vault is pretty similar, that you get diversifying and like investing in the pool.
Yeah.
But investing in a single machine, it's pretty interesting. Okay.
Yes.
Yeah, thanks, Bill. Thanks, Batir, for questions, and we move on. So the
Thank
next
you so
project.
much. Yeah.
Yeah, 10 minutes is over. So the next project is Dominion, and Mark, the CEO, is here. So they tokenize physical silver on Solana, LNBA grade metal in vault custody. You can trade it, lend it, earn yield. So Mark, go ahead.
Yeah, thanks for having us. So yeah, we are Dominion. We're bringing tokenized silver on chain, backed by the real physical metal. If we look at silver, it's one of the most underrepresented RWAs, I would say, right now. If you compare it to tokenized gold, there's Paxos, Tether. You've got a Nasdaq listed one, Streamex. There's various tokenized gold products. Right now, there's probably one, maybe two tokenized silver products, but I would argue they've not really gained mainstream distribution yet. So we believe the opportunity is huge, with the tokenized space due to grow over the next few years into the trillions. The biggest problem with physical silver is it actually trades at a different price globally. So if you buy physical silver in London, it will be a different price from New York, from Shanghai, from Tokyo. The price varies depending on where you are due to local dealer premiums and sales tax. On top of that, silver is obviously very illiquid. If it spikes on a Friday afternoon to a price you want to sell, it's very slow and cumbersome to actually sell it. And then obviously you have the storage concerns. At the same time, it doesn't earn yield. So we want to fix all those problems in one token. Tokenization market share is going to be huge. And then really the opportunity is to give ownership of metal, stored in secure vaulted custody, and then we do monthly and quarterly independent audits to prove the metal is where it is. I think one of the biggest things for us is going to be distribution and partnerships. So we have, let me just find the slide. So we've already secured over $7 million worth of silver with our partner in the States to tokenize. We've got various community activations lined up. We also have a callback for Coliseum, which puts us in the top 10% of Coliseum applicants. And then, like you said, we want to offer borrow and lend, yield, perps, trading, and of course, silver is a great collateral.
Yeah, thanks, Mark, for the official part. Now let's move on to the questions. And I already see the question on our X. So can tokenizing silver help with more orderly price discovery across existing precious metal markets?
Sorry, could you repeat that question?
Yeah, once again, so can tokenizing silver help with more orderly price discovery across existing precious metals market?
I don't know if it can help with price discovery for other metals. I think the one thing what it'll do is bring transparency to a silver price. But like any RWA, the price has to be pegged to the underlying asset. So our silver price is going to be pegged to the XAG USD price. So we can't really change the price discovery because the token's pegged to the real world asset. What it will do, though, is give you one price for an ounce of silver, whether you're in Asia, America, LATAM, or Europe. You'll pay the same price and you'll get the same price when you sell it, which is a universal price for physical silver. But price discovery, no, we won't do anything for price discovery.
Yeah, I think here's a question more related to what happened early this year in China when the price for silver was $50 more than in the rest of the world. So,
yeah, I think those swings are going to continue because certain parts of the world have more demand than other parts of the world. Certain parts of the world mine more silver than other parts of the world. But if you're a retail user and you want to buy silver, You just want the same price as everybody else. So it just keeps everybody on a level playing field with our token.
Okay, so basically, I think the most important question here is I can buy SLV, like silver ETF, on my brokerage account for like under 2 basis points spread. So why would I buy tokenized silver on Solana instead?
A few reasons. One, you can earn yield. You could pledge it as collateral in DeFi. You can take it wherever you want to go, and you can redeem it for physical metal, which you can't do with SLV. So redemption's a big part of RWAs that I think has not been fixed. Most RWAs, there's no redemption right. If you've got SpaceX stock, when SpaceX IPOs, you're not going to get real shares. It just, you probably all sell. So redemption's a big thing. But yeah, the composability in DeFi, plus, correct me if I'm wrong, I'm sure SLV doesn't trade 24/7, 7 days a week. I'm pretty sure at weekends you can't trade it. So we've built a custom Solana price feed. So on a Saturday or Sunday, you'll still be able to trade our token.
Yeah, that's important. However, official exchanges also want to launch 24/7 trading. And I see the question from the chat. So am I correct in understanding that each token will be backed by physical silver? How will the storage and access to the silver be handled if I want to place an order, for example, to convert tokens into 500 grams of silver? How would that work?
Yeah, so the silver is stored in secure industrial or institutional grade vaults in the US. They'll be audited every month, daily attestations, proof of reserves on chain. The vault holder does their own audits. We'll be doing third-party audits on top of that as well, just to prove the metal's segregated and it's there. We actually have some cool content ideas around that. In terms of the redemption will be by request. You'll need to go through KYC and AML, and then obviously, depending on where you are in the world, will dictate taxes, delivery costs, and things like that. So it'll be on a case-by-case basis, simply because the legislation changes depending on where you are in the world, and customs and things like that are super important. We don't want to get caught shipping silver to a part of the globe that the US don't want us shipping to, like North Korea or something like that.
So we have the next question. So it will be on case-by-case basis. This means there will be costs for holding this token because you as a company will have to pay for custody service.
Yeah, we don't pass on the custody services to the user.
Okay, and you also mentioned the yield on the token, but how it works, because silver is a metal, it doesn't pay dividend. You also have costs for custody. So where does this yield come from?
Yeah, sure. So we our business model relies on a few different revenue sources. Trading fees is a big one. For example, we have concentrated liquidity, which generates significant trading fees. We build, borrow, and lend vaults, which generate fees. The silver token will be built into perps pools as well, which generates a lot of fees. And then as a company, we'll hedge risk. Obviously, we have to hedge the risk of silver price. And that will be revenue generating, very small revenue generating. But we'll trade, with the silver market as well. We actually have a few products coming on that, but they're not public yet. But yeah, we have 4 or 5 revenue streams as a business. We've already pretty much taken care of the first year of custody costs before we've even sold a token. In terms of the redemption, the reason it's case by case is because there will be not everybody will be able to claim. We're not doing it ounce by ounce. There will be minimum requirements and things like that. Plus, as you can imagine, the shipping of a lot of silver is pretty problematic. So.
Yeah, I got it. So you have different sources that you will share with your holders. And what about custody? So which vault, which jurisdiction, who's the custodian? Do you have these names?
They will be released before we release the token. We're currently negotiating terms with 2 different silver suppliers and vaults. Predominantly, it'll be in Brink's custody, Brink's vaults. but we do have a couple of other options that we've not fully ruled out yet. So before we launch the token, proof of reserves, proof of vaults, who the partner is will all be revealed. But right now we're still in negotiations on a few things.
Mm-hmm. And how often are you going to audit reserves? As I know, Paxos do it monthly. What's your goal?
Yeah, so the main provider that we're using already does monthly audits. You'll be able to check proof of reserves on chain all day, every day. So you'll see how many ounces we've got versus how many tokens in circulation. And then we'll do quarterly third-party audits. So somebody not related to the vaults, not related to the custodian will go in and audit the vaults every quarter. And that'll be published. We're actually working with a company called Hive, HYVE, and they actually do proof of all the documents. So they'll upload everything on chain. So proof of delivery, proof of purchasing, proof of audits, everything will be verifiable on chain.
Mm-hmm. Okay, and if Paxos tomorrow will launch the silver tokenized token, why your token should exist?
Yeah, well, if that was true, Paxos would have wiped out Tether Gold and StreamX Gold and Oro Gold. The TAM of silver is in the trillions of dollars, so there's more than enough silver for everyone. I think the differentiation is Paxos and Tether don't seem very fussed with launching yield and borrow and lend products themselves. They also don't do redemption, or they do redemption, but you have to hold millions of dollars worth of gold in order to redeem it. I think Paxos, you actually have to go to Switzerland to claim the gold. So yeah, there's difference in products. There's still new gold tokenized products launching today, even with the tokenized gold space in the $4 to $5 billion market. That to us is actually really encouraging, because if people already know Tether Gold and Paxos Gold exist and they're still launching new tokenized gold products, there's one called StreamX, which hit a $1 billion market cap on the NASDAQ last year, that most people haven't even heard of. So there's plenty of room for more than one silver provider. It's really about how you differentiate the products that the silver token opens up. The silver token is just backed by silver. It's what you could do with it, where it's integrated, what partnerships we have, where the distribution is. That's the key to the success of a commodity token.
Yeah, I agree. The distribution is the main question here. And the last one from my side. So what is the liquidity like? If I hold, let's say, $100,000 in Dominion tokens, in Dominion silver tokens, what's the liquidity? How can I release this?
So obviously we've not launched yet, but our liquidity, we intend to have really thick liquidity on Meteora. So you'll be able to, there won't be a lot of slippage. Part of what we want to build is something that can be used by large token holders. We think this is a more, a buy and hold asset, institutional product. So we want to build the liquidity so that these people can move in and out of silver pretty seamlessly. So there shouldn't be too much slippage.
Yeah, the 10 minutes is over, so thanks for detailed explanation. I think it's a nice idea. I also believe in silver, so good luck with that. And we move on. So the next project is Shift. So Michael here, and what they built 2x and 3x leveraged long and short tokenized stocks on Solana and BNB chain. So no collateral, no forced liquidations, and already live on Jupiter. So Michael, your 2 minutes.
All right, thanks everybody. Good to see some familiar faces. Hey Bill, hey Mark. So Shift is an RWA token issuer. We bring fully backed stocks, ETFs, and bonds and other structured products to permissionless markets, currently launched on Solana, on Jupiter. We've been running for 4 years. We've raised over $3 million. We're backed by Chainlink, we're backed by SNZ Holding, and a few other VCs and angels. Our team includes Thomas Wolf, former CTO of Flow Traders, Sean Ben-Ruby, former regulator in the Israeli SEC and the European ESMA, and people like Nir Elkin have been managing trading desk for over 25 years. So very strong team on the Web2 side. We're fully regulated both in Europe and in Marshall Islands. Our custodian is DecaBank, and we're also working as broker with Alpaca Markets. Alpaca's custodying with JP. We're working with Chainlink for proof of reserves. Our current AUM is over $40 million. And as you mentioned, we just released a series of 6 leveraged assets, which we have just lower than 4 million AUM for these 6 assets. They are traded 24/7 via RFQ system on Jupiter with very little slippage. So no impermanent loss at all, no DPEG because of this RFQ system. And of course, next week we're launching SpaceX, 2x long, 2x short, joining the band. And that is in a nutshell about us. Happy to take any questions, of course.
Thanks. So yeah, you did it in the last 2 minutes. Any questions, guys, so far? Okay, Michael, I will start.
All right.
So yeah, what tokens and stocks are available right now?
So right now we have semiconductor basket X3 long and X3 short. We have S&P 500 X3 long and and X3 short, and we have Tesla 2x long and 1x short. These are the 6 assets.
Well, leveraged ETFs in TradFi have a decade problems. And if I hold 3x SPI long, for example, for 6 months, compounding aids my returns, even if SPI goes up. And like it's much worse if we have like channel movements when it goes up and down. So does Shift have the same issue? How does it work in your case?
So basically, Shift works with a company called Direccion, which is a leveraged ETF company. They have a rebalancing system every day at 4. We create a token which is always one-to-one backed by that ETF. Their internal leveraging system works on a daily rebalancing system. So yeah, as you mentioned, there is some decay. Sometimes 3x could be 2.8 in some cases, or even 3.2. So, these things shift and sway. But daily rebalance at 4 UTC. And as far as we can see, this system is working for them for many years. They're a huge company managing billions of dollars, and we're basically tokenizing their asset and their underlying asset. So in terms of safety, we can see that it's very safe. Beyond that, you're not exposed to any wicks in price feeds. So if you're doing leverage right now, if you're doing perps right now, you'd be very much exposed to any price feed sway. And in this case, this principle, even if it goes like in extreme cases, let's say Tesla goes down 30%, you are on 99.999 loss. That principle, that 0.001 is still there. And in case markets go back up, you will not be liquidated, you will not lose the money, you will actually earn. So we think it's a very good product market fit. We think it's safer, and we think it's very interesting to see how people adopt it right now. We're going on more than 700 users, so I think it's pretty nice for a bear. But of course, we continue to bring more assets as they become relevant, and I believe a lot of distribution channels as well. So going to be on 1inch, going to be on PancakeSwap, and going to be on many other places as well. So getting as many eyes, relevant eyes as possible. And also going into more institutional kind of vaults and yield-bearing products as well. This is our next direction and our next, I'd say, line of products, which we'll present soon.
Awesome. So any questions from the audience? Okay, I don't see anyone. So I have more questions. Like Alpaca Markets is your underlying broker. So what happens if Alpaca has a problem?
Well, first of all, we have a backup. We have DecaBank, which is also working with us as a custodian and as a broker. And we have Erste Bank, which is the biggest bank in Austria, which also we have an open account with. So we have 2 backups for that right now. And we're also working on additional banks in additional countries, jurisdictions, licenses, being kind of a centralized in a decentralized body. We try to be as decentralized as possible, but we understand that there are limitations, of course. We also work with private segregated accounts, so not us nor the bank. If anybody goes bankrupt, we cannot touch these funds. There's a direct link between the sub-DAO, a membership ownership of these tokens, and the actual underlying asset.
Okay, so you spread it across different institutions and jurisdictions, but like leverage tokens, basically like they track stocks and they are securities. So we have different regulators here, like MiFID in Europe, SEC in the US. How do you navigate in this?
Oh, it's not an easy turf. Most of the things that we've been doing the last couple of years are legal. The technology is actually the second thing that's in line after legal. We're working on our MiFID license. We've been working in the European region after a micro license as well for our asset reference tokens. So working on 2 different licenses in the EU. Also have a Marshall Island license, working on two further jurisdictions, Jersey Island and Bermuda. So basically being available at as many jurisdictions as possible requires more licenses. Being able to work with different types of crowds, either institutional or retail, permissioned, permissionless, etc., requires different licenses at different situations. We also have, I think, even 3 more jurisdictions that we're in negotiations with. These things cost a lot of money, take a lot of time, but in the end, they open more abilities to sell to more people. So currently, of course, we're blocked off the US, we're blocked off the UK, but we are open to most of the world.
Yeah, definitely. It opens a lot of doors. And you also mentioned that there are no liquidations. It's fully backed, like you diversified from different institutions. So what is the main risk for holders?
First of all, these are leverage assets. They're structured products, but they're still volatile. They have, last week we had 17% movement on SOX X3. Yesterday we had 22%. So I'd say volatility. Of course, our smart contracts on Solana are audited, even though Solana is a very, very structured blockchain with, I'd say, very little hackability. So in terms of technology, I think we're very safe. We have multi-sig, we have POR. We're working with many fail-safes, VPNs, 2FAs. Everything is very, very, I'd say, there's no even surface to attack. That's what we kind of created. But that's just a little detail. In terms of risks, of course, there's always the risks that a regular financial instrument presents, risks of losing the investment because it goes down, risk of smart contract, risk of bankruptcy in remote cases. These are and do exist. We do our best to mitigate them, as I explained, by all the different measurements and methods that we already put in place. So it is, as far as we can see, as far as we built it for 4 years, to make it as safe as possible, transparent, decentralized, licensed, and very, very safe, audited, and built by a team of veterans in both Web3, Web2, IT, security, and cyber. So that's what I can share.
Perfect. I appreciate the transparency. And the last questions from my side, like same question, like for Dominion. So what is the main difference? Like, why should I buy your tokens, not like direction ETFs from my broker? And what are the fees?
So first of all, Dirección are available on market hours, and we're available 24/7. There are, of course, higher fees at night because of inventory risks. So market maker that is keeping its inventory takes a bit more spread at nighttime and weekends. But at market hours, the spread is extremely low. It's almost TradFi price. That is the magic of the RFQ system. Our minting system works back to back with the market maker, so anytime inventory is finished, we can immediately present more. And just remind me the question because I'm rambling on. Sorry.
Yeah, what are the fees like compared with ETFs?
So we ourselves currently take zero minting fee, zero management fee, and zero redeem fee. We take a 0.1 spread at market hours, and the spread can vary at night and weekends. Once again, these, I think, markets that are not yet mature for weekends and night times will take some time. So I kind of educate the crowd not to go and buy at night regularly or buy at weekend regularly because the prices and spreads are higher. But if there is an event, that is the only place that these assets are available. So Tesla has a recall or something like that. And I think you asked why should you actually buy them from us and not Direxin? So I think that small 10 bips fee that we're talking about right now is insignificant to the fact that it is permissionless, it is accessible all over the world and 24/7, fractionalized, and of course composable. You can take it to DeFi, you can take it to more lending mechanisms, you can take it to yield-bearing mechanisms. We're going to do a lot of different things with a lot of different companies like Loopscale. I think someone mentioned before. You're going to be able to do more with these tokens than just that leverage ETF that you could put in the bank or put in your broker account. And that's it.
That's definitely a key thing why you should choose blockchain. Okay, so thanks, Michael. It was great to hear from you today, and we move on. So the next project is Aini Gold, and Daniel is Aini CTO. So Aini connects investor to active gold mining in Peru, and payouts are in PAXG, physical gold on chain. They also just launched minting NFTs. So Daniel, go.
Thanks a lot. So thank you for having us. I'm Daniel and CTO of the project of Any Gold. And as you know, we see gold as the oldest and largest store of value in the world. By now it has over 32 trillion market cap. And I think it is apparent that central banks are buying it. China has been adding it for more than 18 months on their reserves, kind of straight. So this also moves, of course, the gold price. We can see gold price above 4,000 an ounce right now. And it's also quite impactful. So the problem has always been the same in this case. So for centuries, I think gold hasn't been able to generate yield or the income, as you can say. So basically, you buy a bar, you hold it, and in 10 years later, you still will have a bar. Yes, it protects your capital, but it doesn't grow it. So this is something that we have set up to change. And by mining is where the income actually lives. So a working gold mine produces you new gold every day. And I think that the economics behind that are pretty straightforward. Our production costs are under $6 per cubic meter. And each cubic meter produces around $15 in gold at current prices. So that's almost a 60% gross margin, which is quite significant. And Any Gold connects you with connects the investors to these mining economics, basically through our digital layer that we have enabled. So the way it works, you buy Any tokens, you stake them, and you become eligible for payouts in PAXG. And PAXG is basically physical gold held in Brinks vaults, regulated, and where one token basically equals to 1 troy ounce. So this is also very important. So you're not getting paid in our token. You're getting paid in gold, which is, I think what the investor is actually looking for. So the staking contract is live by now on Ethereum chain. You can verify it. We have been audited also by Certic and PeckShield.
Yeah, thanks, Daniel.
Yes, perfect.
Yeah, so let's go with the first question. You just launched NFTs for gold miners, but explain this simply. Why you have NFTs, why you have tokens, and how does it work?
Yeah, that's an excellent question. So the reason why we have basically two products for the same thing, you could say, is that we want to enable the investor to have a flexibility. So on the one side, the structure is a bit different. So staking participants, they can commit for longer, but when they don't need the flexibility, so you lock your tokens for a specific term. And the gold units, which are NFT based, you don't need to lock it. So you can buy, you can sell in our marketplace anytime. So it's basically one utility in two ways. You can commit and stay, or you can stay more flexible. And we build both because we want investors to choose what fits them. So we don't force everyone into just one specific model.
Okay, and what should investors prefer in your opinion?
So it depends a bit on the also on the investment appetite, but like I would say, if someone prefers a bit higher yield, then he will prefer the staking model because the staking model offers a little bit higher yield. But as I said, you don't have the flexibility. While with the gold unit, you are able to buy and sell anytime you want. You have a little bit lower yield, but it gives you greater flexibility. So I would say for retail investors, usually they tend more to the gold units because it's a very proven thing that works. And for a little bit institutional side, they don't like so much that they have the lower yield. They want the higher yield, and they want to lock up the tokens because the time horizon is also a bit different. So we also don't have a problem with that.
I got it. And you had staking lock from 1 to 4 years without
Yes.
early exit. So that's pretty long for companies that pretty early, right? And why should someone commit to that, in your opinion?
Well, I think it is very important that three things that you can associate with that. Like, first of all, you're able to verify, in our case, everything on how it is working. And this is very important to be transparent on this. So first of all, you can check all the staking contracts on the Ethereum mainnet. It's public. You can see all the rewards, the PAX-G rewards, which have been paid out. We've paid out by now over $200,000 in rewards. So this is also very transparent. And the most important thing is the concession itself, because the concession itself, these records have to be public, and also the government has to be able to state these public records. So everybody is able to go on our website. They can check the public records on the Peruvian website, and then they can see that everything is exactly how it should be. So this should give the trust.
Yeah, and what happens if, I don't know, gold mine tomorrow will be shut down because of government, because of I don't know, Peru is not the safest country in the world, so everything can be happen. So what will be happen with investors in this case?
Yeah, that's an excellent question. So basically, I think the kind of risks that you have with this kind of regulatory decisions, you can say, we try to mitigate this by having multiple concessions on multiple jurisdictions also. So we already have our second concession, and now we're already expanding to also different jurisdictions so that we have basically the diversification of this, so that if anything would happen at one of our concessions, then we would have alternatives to always be able to have the rewards of the users. And don't forget, only a certain percentage of the whole operation is actually allocated to the token. So this means that, of course, if there is something and we need to reallocate from another concession, we would be able to do so at any time.
Okay, and yeah, we have a question. It's a pretty simple one, but what country the gold originated from, and which country or town exactly?
Very good. Good question. So this is the most important one. And our concession is in Peru, and it's in Madre de Dios. So I was just there in November visiting the gold mine. We have a very nice documentary about it on our YouTube page. So if you have time, please check that out. And yeah, so this is where we are founded and based right now, and it has been operating since 2025. So it is not something in the future. It's already an existing gold mine.
Yeah, amazing. I love the transparency. And can you walk us through the NFT and token mechanics? So what does owning a token or gold miner actually mean for investors? So what do they actually have, like, hold?
Well, they're actually basically able to get, like, you can see it like as a forward to your to the proceeds of the gold mine, you know. So you can think of it as an the mining power, we say. So the mining power is an equivalent of how much the token or the equivalent in gold unit is able to produce. So the capacity to extract from the earth. And we have a certain average, which each token represents. And by that, you are able to see, okay, in the future, how much is it possible to be able to mine with that power and to extract. Now, of course, there is a variability inside that. There is no fixed guarantees on that, because this is also a bit volatile. But we have a pretty good average. And so therefore we can make it very good on a, let's say, progress on how much it is able to generate.
So do you have like exact formulas that connect rewards to real mining operations, gold
Yeah,
price?
yeah, of course. So you can think of it like as the gross of how much you're able to extract from the ground, and from that you get that in grams, because of course the gold will be in grams, and after that you are going to be deducting the operational costs and also the management fee. So once these two cost blocks are subtracted, you will have basically the reward that is being able to that we can pay out in PaxG to the users.
And you mentioned like your margin something around 60+%. It's pretty big, but what happened if gold price will go down, let's say, for 30%? What investors will get?
So 60% I didn't mention. That is a bit too high. So we are averaging around 25 to 30%. This is the average around at the moment. And yeah, so at the moment, it is also, of course, it is subject to the gold price. So since we're gold linked, the gold price plays a role. If gold prices rise, the tendency is that, of course, the reward is going to be also increasing. If the opposite happens, then the same thing happens to the downside. But the good thing is that the break-even price from the gold mine is quite substantially low at around $1,800. And I think by over 4,000 that we are currently, and as of before, not so long ago, we were around the 5,000 mark. I think this is a pretty substantial buffer that we have there. And to be honest, such a big, steep drop to such low prices would also mean something must be wrong in the market, to be honest, because that would be a really big drop. But even that, it would be sustainable in the long term.
And like, if we imagine that price goes down too much, like for post-production price, will investors still receive some rewards, or like they get nothing in this case?
So as long as the production price, the reward basically is above this production price, then the investors will always be able to receive something, because as long as there it is net positive, I would say, then yes. But if it becomes negative and the operational costs exceed the gold price, then it would just pause until the gold price increases again.
Okay, and regarding the concessions, like, I think some people can ask, there are a lot of illegal concessions and mining in Peru. So how does it work in your case?
So in our case, and that's why it's very important, we are working together with the government, and actually we are one of the pioneers there, where we are also cited as a very good example on how it should be done, because we're trying to extract in very environmentally friendly way. So we have different methods that we use in order to extract the gold and also purify and also be able to separate it from the soil in a different manner than other gold producers do. And this involves that not using any mercury.
10 minutes are over, but anyway, like the model is very interesting. So thanks for sharing this. Guys, just want to remind you. So if not all questions were covered, you can still ask the questions here in the chat, and I think founders will answer you. And we are moving on to the next and last project for today. So Agama Finance and Tom, the co-founder of Agama. Agama is on-chain lending backed by trade finance and private credit. So you deposit stable coins, they lend that money to real businesses, and you earn yield from loan repayments. Tom, share all the details with us.
Everyone, yeah, great. So yeah, we built Agama because after speaking with like a dozen of TradFi players, LPs and asset issuers over the past few months, one pattern became very clear. Most of private credit assets you see on chain today are the one like TradFi didn't want to finance in the first place, and they come on chain for liquidity, not because blockchain makes them like a better asset. So we built a protocols to fix this problem. With two products. The first one is our private credit curated vault, where users deposit stablecoin into a structured vault backed by vetted private credit pools, which is trade finance, corporate bond, private credit position, and so on. And the second one is our yield-bearing token with our synthetic dollar. AGUSD is like a synthetic dollar backed by a diversified basket of RWA pools, and we have a stake version of that, ACGUSD. It automatically captures yield from all underlying pool as it's flowing. So both products relies on the same foundation with our underwriting first approach, because every single asset goes through our underwriting system before entering Agama. So we score, we rate, and we stress test. So if it doesn't pass, we don't take it like mainly. So this is how we solve the problem of this mismatch. So yeah, where we are today. So a quick update on where we stand. We've been building since the end of the last years. We now have 3 TradFi assets issued on board and signed, representing roughly like $4 million of private credit ready to be deployed on chain. And on the LP side, we are in the discussions with a few LPs coming from VCs, high net worth individual and family offices. And we'll launch our first vault in the coming weeks with our first asset issuer. So yeah, we are actively looking for, more LPs interested in early vote deposit and partnership with like asset issuer to like the private credit ecosystem. Yeah.
Thanks, Tom. And again, it was enough time for us today. So let's move on to the question part. Like any questions from the chat, guys, or maybe like you want to ask it. And yeah, I will start. So first of all, what's the approximate API you're targeting, and will this be liquid, and I can withdraw it anytime, or how does it work?
Yeah, so we're targeting for our curated private vaults, private credit vaults, sorry, between 8 and 14% of APR. And for the vault, it will be liquid within like a week. So the redemption period will be a week. It will be weekly redemption periods. And for our stablecoin, it will be like fully liquid. Yeah.
Okay, cool. And private credit sounds safe, but we know that Maple had defaults and that they did the whole rebranding. So what's your default rate? And if you haven't had one yet, what happens if you do?
Yeah, so as I said, like as you said, sorry, some default happen in private credit. So we build like an architecture around like that's reality. So the first loss line is always like the originator junior tranche. They retain like a first loss position in every like facilities investment, which keeps their underwriting incentive aligned with our outcome, which is like to be like fully liquid, but also to have like no default. So when a borrower in their pool default, they eat the loss before any of our capital is touched. And if at the end, if the loss exceeds that junior buffer, we have like a stability pool, which absorbs the next layer. It's like, I would say, our internal insurance pool, size at between like 10 and 15% of our TVL, where LPs accept first loss exposure on the Agama side in exchange for a boosted yield. Yeah.
Okay, awesome. And you're building on Rails. Most people in this audience don't know what Rails is. So can you explain in 30 seconds why is a chain and not Ethereum mainnet?
Yeah. So quick clarification: we are not building exclusively on Rails, but yeah, we are like EVM native, which means like we can deploy on any EVM compatible chain. But yeah, indeed, we are partnering with Rails, which is like a RWA blockchain. They launched the mainnet at the beginning of May, and Rails is supporting us through their launch partner program. They are helping us bring our first vault to market alongside protocol like Tether, Layer 0, Enzyme, and Obligate. So yeah, we have like a strong alignment with them for our initial launch. But as I said, our long-term strategy, I would say, is to follow demand. So we will deploy wherever our asset issuer on LP want to operate. Mainnet is obviously like the best ecosystem in terms of liquidity and DeFi composability. But yeah, it's like clearly part of our deployment plan as we scale. We are looking, maybe we are in discussion with some L2s as well. So yeah, it's our plan to be fully like EVM compatible in the coming weeks and months. Yeah.
Okay, amazing. And Tom, can you walk us through the one real loan? So who borrowed, what for, what collateral, what rate, what happened? How does it work in the real world?
So yeah, sure. So we signed 3 asset issuers so far, all coming from TradFi background. So the first is like a Luxembourg-based finance platform. So to give like an example, they originate senior secure exposure across like short-term receivable, which is trade invoice, supply chain finance, payment settlement receivable, SME working capital, and so on. So the structure is like a book with the originator retaining a junior tranche, as I said, and the net yield on the senior side sits between like 8 and 9% range. And the two other are similar, like instant originator with real TradFi, like D flows and so on. And we want to cap the first pool and the first vault between like 500K and 1 million. And the minimum investment will be like $100 for like the retail market. Yeah.
Okay, and yeah, like basically how you work with due diligence. Is it like your responsibility or platform?
Yeah, good question. So we have a partnership with Cairo Finance, which is like an underwriting infra company backed by Allianz and so on. They provide like a distributed and verifiable credit assessment on chain. We use their stack, but the underwriting is not like outsourced to them. We run on our internal underwriting process, build like with like some TradFi standards, scoring, ratings, stress testing, and so on. And we are building like an AI layer on top of to monitor every facilities, like accelerating scoring and so on, to have like a good overview of our asset, but also of the workflow of all the private credit assessments. And if a bad call happen, the loss, as I said, is absorbed first by the originator tranche, and by after that our stability pool. So yeah, we have like a full underwriting process and also like a full risk scoring as well process. Yeah.
Okay, and if the loss is more than like junior tranche originator, what is the next like protection mechanism, and who will lose capital then, and in which case? And like one more question here, what exactly investors own?
Yeah, so the investor, as I said, own like the junior tranche plus the asset, I mean. But yeah, as you said, like if the loss exceeds that junior buffer, we have like a stability pool to absorb the next layer. And only if the both buffer are exhausted, those are cut, it's our SAG orders through like NAV adjustment. So we have like all this layer on workflow, and our AGUSD itself, which is like the synthetic dollar, is the most protected layer of the stack. So the 3 layer, we have like three layer of loss absorption before the average users feel anything. I mean, yeah.
Yeah, amazing for explaining this. And we have one interesting question. Where are you based, and are you hiring?
Yeah, our team is like mainly in Europe. And we have like some partnership with like private credit issuer in Asia and Middle East, but our first deal will be in Europe with like a Luxembourg-based company, as I said. And yeah, we're not hiring for the moment.
Yeah, thanks for sharing this. So guys, do you have any other questions? Looks like we covered everything.
Yeah, thank you.
Yeah.
Thank you, Daniel.
Yeah, thanks, Tom. So thanks everyone for joining us today. That's all five. And we saw today tokenized machines, silver, leverage stocks, gold mining, and private credit. So thanks to everyone who joined us today, who asked questions today. And yeah, like the projects go through hard questions, hopefully make it clear for you guys and make your investment decision better. But I want to like add that if something caught your attention, it's like just the first step. You can go to the socials, to the websites, ask the comments even under these records. We will connect all questions to founders and help you with this. And we are going to run these events monthly. So if you are building something and want to present, or if you are an investor who wants to get some pressure test for founders, so reach out on Telegram or LinkedIn or X. And yeah, recording will be on X and YouTube. So thanks for watching and see you next month.
Thank you.
Bye-bye.
Bye.
Thank you. Bye-bye.